2022 was a rocky year for IPOs. The market saw volumes fall 45%, with proceeds down 61%. Felt like more than that. In the U.S., the number of IPOs fell 76%, proceeds down 95%. There's the U.S. figures. And take a look at the Renaissance ETF IPOs. It's down more than 50% over the last year. So does a new year mean new opportunities for the IPO market? Joining us now is Cowen CEO Jeff Solomon. Always like to get a good read on the capital markets with you. Welcome.
Yeah, good to see you. Happy New Year.
Happy New Year. Is this year going to be better for the markets than last year? Or
well,
worse?
let's talk about IPOs or financings. In general, like the Fed is, talk about the Fed today, they're doing exactly what they said they were going to do. Right? They have got to make sure that everybody understands they're going to cure the scourge of inflation. So it's not at all surprising to those of us in the market who've been around for a while. If you're a student of the market, you know what happened in the 70s. They know what happened in the 70s. The Fed took their foot off the gas at crushing inflation and just had to come back bigger and badder later. This Fed chair knows that story, so he's going to continue to talk down inflation by continuing to be hawkish. And that is exactly what happened today. It's exactly what we thought would happen.
But we rallied through it, which means a lot of that is in the market.
Listen, the market is a leading indicator. The Fed is a lagging indicator. The Fed is going to wait for affirmation that you're seeing the slowdown they expect to happen before they take their foot off the gas. The market will price that in, as the market has priced that in. You know, we all focus on the last few weeks of the year because we have recency bias, and that wasn't great, like no Santa rally. But there was a fourth quarter rally. And why? Because the market is pricing in the likelihood of settling out ultimately at a much higher level. And okay, it's still pretty good.
So does that mean we're going to see IPOs this year?
I don't know if it'll be, the same as it was. Like, it's hard to argue that it'll be the same as it was in 20 and 21. But could we go back to 18 or 19 levels? Yeah, I think we could. There's more than over 100 plus companies that have selected bankers in the backlog waiting. And I don't think there needs to be a Fed pivot in order for that to clear. There just needs to be a significant sign that inflation is actually abating and that the Fed is going to actually stop raising at some point. And I think there's a misperception sometimes I read. People want to see Fed tightening. I don't think it has to be Fed tightening. I just think it has to be Fed's not raising is good enough. And I think this market today kind of indicates that.
So are you looking, toward the end of the year for more action?
Yeah, I'd be more second half. I think there will be IPOs. Look, there was one meaningful $1 billion plus IPO, Mobileye, this year, right? And it traded up really well, but only one. Yeah. Like, it's hard to say that this year is going to be worse than last year. And so I think if you're looking for, a silver lining in this, last year was pretty rocky and pretty rough. This year it's hard to see how that gets recreated because we just know so much more about how things are going to settle out.
What about M&A?
So M&A volumes have picked up again. I think last time I was here, I talked about how I think, we'd see a bit of a rally in the fourth quarter. That actually happened. I think we've seen, we probably put in the low in M&A in the first half of last year. I think we'll get back to levels that we saw in 18, 19. I think it'll be much more selective, though. I think there'll be certain types of deals that get done and other types of deals that won't get done. If you're a sponsor-to-sponsor deals, still getting done. Lots of money in the sponsor's hands. If you've got good cash flows, easier to finance in this environment. Private financing, still much more available than leveraged lending. So those kinds of deals, middle market deals, getting done. What's not getting done? If you've got a cash shortfall, if your business model requires, or a deal is required to have like margin improvement in order to meet the numbers. Like, people aren't doing those. Why? Because they don't have to, unless it's priced right. And that's the last thing I would say. I think we're finally starting to see, both for the IPO market and the M&A market, formerly high-priced valuations of private tech companies finally coming down 50, 60, 70% on their next rounds to match what's happened in bellwether names like Tesla. Like, Tesla's down 70%. You can't tell me that your tech company that's a private company isn't down or isn't down meaningfully. And I think that's kind of what's happening.
You're seeing that starting to happen to that degree in the private market?
People who need to raise money reach a point at which they just say, I need the money, and the valuation is less important. And those that did it, because the lesson, like, a lot of people got wiped out this year, right? Because they didn't get themselves financed in 20 and 21. So, yeah, I think the message is valuation is less important in a difficult and dicey environment. Get your money, execute on your business plan. Long-term things will work out.
Cash flow is everything.